Dr. Kim is the founder and president of Sweetwater Digital Asset Consulting. His breadth of knowledge is well suited to understanding both the technical and socioeconomic aspects of Bitcoin, Monero, and other decentralized ledger technologies. Monero volunteer, polymath scholar, buy-side advisor. Please welcome Dr. Daniel Kim.
Hey. Hello. Hey everyone. Glad to be here. So to introduce myself a bit more, I'm based in Boston, but I was born in Wyoming. And actually, I'll share a bit of family history. From 1910 till the end of World War II, Korea was colonized by Japan. So they took over, they forced the people to give up their language, learn Japanese, take Japanese names. And as it turns out, my paternal grandmother was a leader in the resistance against this tyranny. So as it turns out, I'm the grandson of a freedom fighter. And Boston and Wyoming, of course, are known for having a bit of a libertarian streak. Back in the day, I was fortunate to represent the United States in math. So I ended up at Harvard, studied physics, stayed for my PhD. My first job out of grad school was with a symphony orchestra. So I played in the first violin section, and then the principal keyboard seat opened up, and I won that too. So I have experience with basically idealistic people working for much less than they should be getting, and the collaborative efforts that they can do to make something great happen. There's also something that I observe just kind of socially in the blockchain space, and that is people in classical music, the patrons, they basically tend to overemphasize the importance of the conductor. So the guy who, or woman who stands up at the front and waves their arms around actually produces no sound, but is kind of adored and appreciated by the crowd. There tends to be some of that in any human endeavor, and I'd say blockchain projects are no different. The cult of the individual leading the project is not where the actual work is done. Sometimes the actual work happens with people you've never heard of. That's something to keep in mind, I think. Concurrently with my symphony experience, I became a med school professor, so I helped a few thousand people with their fights against cancer as a radiation physicist, helping to give focused doses of radiation to tumors. After that, I wanted to signal a willingness to, a signal that I cared basically about how the world works. So PhDs in physics can go deep. We're not really afraid of anything technical, but maybe tend to not be a little all that aware of kind of social things or the way things actually get done in the world. So I signed up for the executive MBA program at Yale. As it turns out, my investing professor poached me. So my next sector was in the for-profit field after working in nonprofit for about 10 years. I became head of research at an equity manager, managed about $1 billion. And since last July, I've gone full-time into crypto. I now have a solo consultancy, Sweetwater Digital Asset Consulting, and there's my logo. It's designed to look like a key, and the mountains in this little setup, they are reminiscent of the Rockies in southwest Wyoming in Sweetwater County, where I was born. So now I seek to help institutional, ultra-high net worth, family office, trusts who know nothing about crypto and really want to get up to speed and get someone on their team who can help them avoid the myriad of awful projects out there. That's what I do now. So I thought I would, wear what I would wear for clients. I realize this would be like wearing an Anarchapulco t-shirt at a investment conference, right? So, but I think this crowd would realize that, clothing is superficial. I'm also a community volunteer for the Monero project, so that's what I'm here to talk to you about today. I think this is a project that is important for humanity, and I don't think that's an overstatement. This is an important project. All right. So since I've been thinking about blockchain pretty deeply for many years now, I see this happen every time there's a down market, which we're in now, of course, right? So the question is crypto here to stay? Is there going to be another boost of interest, or is it just going to fade down to zero from here? I've been thinking a lot about this because it's kind of the key question. Basically, getting into crypto means making this binary decision. Is this a flash in the pan? Is this just a fad? Or is it here to stay? I think it's here to stay, and I think I can explain my thinking behind this pretty simply. So we all now take the internet for granted, right? And the internet, in one sentence, is it reduced the cost of copying data around the world to zero. Everyone now has a smartphone in their pocket that's a fast, Xerox machine, basically, to use an old school analogy, right? It's very good at sending and receiving copies of ones and zeros to other people and from other people. So what is rare in a world in which everybody has a digital copier? Well, I can think of two things. One is something that's digitally scarce, and that would be like a digital form of money. And the second thing would be digital privacy, and that is because everybody has a copying machine in their pocket, and because people choose to do, really important things with that power, like upload photos of their lunch to Facebook. Because of that, now there's data out there on everyone at a level that is just creepy. It's just creepy. So that's another thing that is going to be a rare and increasingly rare thing in the future that's going to be sought after is privacy. So if we look outside of cryptocurrency, what are our options for scarcity and privacy? Well, here's what we have for scarcity. This is from the St. Louis Fed, which maintains a large data trove. And what you're looking at is the supply of fiat currencies. Right? This is M1, which is defined as cash plus checking accounts, plus traveler's checks and some other random things. But basically, it's cash money plus checking accounts. And you can see that these curves all seem to have something in common. So these are the people that we entrust to maintain digital scarcity in the fiat world. Okay. And the state of privacy, it's kind of hard to find a single slide that captures just how bad things are in that sense, but I think everyone here is probably aware of all the data collection that's happening, both voluntary and involuntary, both from the government side, government at various levels, federal, state, local, but also companies, corporations trying to use us as the product to further their profit. I would recommend the Electronic Frontier Foundation as if you're especially in the U.S. and need a tax deduction. They're a charity that does a lot of work in digital privacy. All right, so what's Monero? This is why my one-sentence summary of Monero. It's what Bitcoin noobs think they bought. And what Bitcoin noobs think they bought is a fungible digital sound money. Now, the fungible, that's a word that gets used a lot in Monero. It basically means a money in which one unit is indistinguishable from another. You can't tell two different Monero apart. This is different from the situation with a coin with a transparent ledger, which would be like a dollar bill, in which when you flip over the dollar bill, you see a nice organized list of everyone in the history of the money who's ever owned that dollar bill. This is what you get with a transparent coin. And one other thing, so a lot of speakers have talked about flipping narratives and frameworks. So if I can go back to this. So we're in a situation now where we have this category called privacy coins, right? There's regular crypto, and then there's privacy coins. And I would like to encourage you to question this nomenclature. Why is that? So when you think about the fiat money in your wallet, you know, the bills and the coins, do you call that your privacy money? You know? Oh, my checking account, that's my regular money. This is my privacy money in my pocket. You know? Like basically by using the term privacy coin to kind of shunt off this class of coins into this little privacy corner, it encourages basically thinking of it as the outsider, the other, right? It should be the opposite, right? So money should be fungible. So if you have a coin that's actually fungible, that should be a coin. And then in contrast, the money that has the list on the back of it of every other person on the planet who owned that money before you, that would be a surveillance coin. Or maybe I would suggest creepy coin, right? All right, so about the Monero project itself. So that was Monero 101. You know, it's what Bitcoin noobs think they bought. And we're moving on to the second class here, project features. So Monero stands out in the current crypto system as being exceptionally unscammy. There's no pre-mine, no pre-sale, no insta-mine, no token sale, no ICO. There's no diversion of miner fees to do things other than mining. And I know that this is, you know, probably an anti-regulation crowd, but there actually is one regulation that this satisfies, which is FinCEN's pronouncement on what constitutes a virtual currency, right? And basically puts a currency into a somewhat safe space in terms of regulation. This is what the FinCEN pronouncement did several years ago. One of the requirements for a coin to be considered a virtual digital currency is that all fees that are designed to go to the miner go to the miner, and you don't shunt some of it off to make a slush fund or, you know, a big pot of money that you can sprinkle around. So Monero has this purity of mining fees going directly to miners. It's 100% free and open source software. There's a proof of work algorithm, CryptoNight. The code base was written from scratch. It's not a fork of Bitcoin. It was written from the ground up. So this is an important technical hedge. So, you know, if you ever worry about, well, the Bitcoin code base is pretty complex. What if there's a bug that, you know, even though it's open source, what if there's something in there that slips under the cracks? You want a technical hedge for that? You would want to use a code base that was written completely independently of the Bitcoin code base, and that is Monero. Even the elliptic curve used is different. So instead of SecP 256K1, which is the curve used in Bitcoin, In Monero, we use ED25519. So I don't want to go into the geeky details of what that means, but think of it as yet another technical hedge. If there ever is something that's found to be lacking with SEC P256K1, then Monero would not be affected by that. Monero has regular 6-month forks. And unlike other communities where the words hard fork inspire some sort of discomfort because it's basically associated with a fight and a divorce, right? So in Monero, our hard forks are actually kind of looked forward to by the community. There have been no screaming matches in our community. The hard forks are perceived of as upgrades to the protocol that are necessary in a work in progress that's not complete like Monero is. So, coins are communities. Like we tend to forget that, when you look at, coin market cap and you focus on price, but each of these projects has like a community of people behind it. And if the situation is such that part of the community starts fighting with another part of the community, that's when you get these, basically, it is divorce. Really? All right. So Monero has 4 3/4 years of operational track record, and there have been massive improvements. So the Monero that was in place 3 years ago is not the Monero that is in place today. It's gotten much better on many fronts. All right, there's no formal organizational structure, which is a good source of decentralization, and it's hard to shut this project down. There's an idealistic, scientific, and I would say yet welcoming community. There's a Monero research lab, full-time PhDs that are supported by community contributions. We use the LMDB database, and Howard Chu is a complete OG in the open source world. He is an active contributor to Monero. We have over 300 code developers, and these people are working out of passion, right? They are almost none of them get paid. And so unlike other projects which talk about having, so many months of runway, or maybe, a few centuries of runway if they did an ICO and pulled it off well, Monero's runway is really, technically it's infinite because you have passionate people working on the project. They're not going away because they're not gonna, if payroll doesn't happen. And there are volunteer work groups for community outreach. All right, the key to Monero is that it has a blockchain which keeps track of who sent what to who, but unlike Bitcoin, where all those details, the sender, the receiver, the amount, those are all public and viewable to all. In Monero, all that information is obfuscated and encrypted. So if you are just a random Joe looking at the Monero blockchain, you see no details. You see that transactions happened. You can't tell who they were from, who they're going to, or how much they were for, right? If you are a participant in the Monero ecosystem, in other words, you own a private key, then you can use your private key to scan the blockchain, and then what will happen is that those transactions that you were involved in, you will be able to see. Transactions that other people were involved in, you still can't see. It makes intuitive sense that this is how it should be. It's just none of your business what other people's transactions are. It's none of your business what other people's account balances are. It should kind of offend people that in a transparent coin, it's even possible to type in somebody's address and you can see how much money they have. All right. Another thing I wanted to point out is that if you think about it, fungibility in a digital asset is a sort of oxymoron. Digital assets are made of ones and zeros. You can obviously tell when one string of ones and zeros is different from another. So how are you going to make them to be fungible? How are you going to manufacture that? And my point here is that it's not a binary switch. this fungibility needs to be manufactured. Like you need to do several things to create the fungibility. So there's three different things, three different technologies that are used in Monero that are unique as far as implementations of any major blockchain that protect the sender's identity, the receiver's identity, and how much got sent. So as a result, the coins are indistinguishable. They have no memory, right? All right, sometimes I get this, this pushback like, who needs this? Who needs privacy? It's just criminals that need privacy, right? So here are 4 legitimate, squeaky clean people who can benefit from Monero. One is anybody who uses the coin and in a transparent ledger must worry that the reputation of the people that they're dealing with and transacting money with is not that good. Transparent ledgers promote a socialism of reputation. And so you can have a situation, so let's say you sell your car to somebody, you get crypto for your car. Unbeknownst to you, the person who this transaction, the person who gave you the money for the car, is a vendor on the dark web. You didn't know, but now you're under suspicion. So a dark web vendor now gave you $10,000. Now you're under suspicion for being a supplier to the vendor. You had nothing to do with that. You're innocent. So actually, it's the innocent who need this technology the most. It's the innocent who have pristine reputations, who can't afford to have them risked by the actions of the other people on the value network, right? So for businesses, let's say you're a forward-thinking business and you start using crypto for all your books, right? You receive crypto from your suppliers, or you give crypto to your suppliers, you receive crypto from your customers, you do your payroll in crypto, you do a whole 9 yards in crypto, right? So now your competitor looks at all that on the blockchain. They go to your suppliers, now they know who your suppliers are. They see how much money you sent the suppliers, so they can kind of guess what kind of price you're getting. They can see your customers. So now me as the unethical competitor company, I go to this customer list and I offer them 5% off the other guy's price to come shop from me. And I can offer exactly 5% off without even asking them what they paid, because I know what they paid, right? So this is another 100% legit use of privacy tech. For employees, so now let's say you're an employee of one of these forward-looking companies that use crypto. So now your coworkers are going to know how much you make, right? So payroll happens every Friday afternoon. That's when you get your Bitcoin or half a Bitcoin or whatever. And so that's probably when all your buddies, your coworkers also get paid. Because you can trace the transaction that your boss gave to you, you can go to your boss and then now look at your boss's account, see what payments the boss made to other people that are in the neighborhood of 1 Bitcoin. Doesn't take Einstein to do this, right? For wealth owners, and this is huge because I never thought that the killer user group of Monero would be the darknets. I always thought that the killer user group of Monero would be the world's wealthy. And the more zeros you have in your net worth, the more you care about privacy. The more zeros you have in your net worth, the less acceptable it is to you that just any Joe can, any nerd can post on Reddit saying, oh, Mr. Rich Guy just moved some coins. This actually happens, right? You see this on Reddit like every other week. Some coin from block 12 or something moved. Wow, it's big news. Again, it's creepy. Another underappreciated aspect of Monero is the coin supply. So Monero has 2-minute blocks. Unlike the civil war in Bitcoin that's happened over the block size limit, in Monero, the block size limit is flexible. So if there's demand, the penalty that gets applied to miners for over big blocks gets adjusted. So basically, there is both disincentive for spam to happen because because miners get penalized if they make giant blocks. They'll lose their reward. So they don't do that. They will mine what's there, but the limit will be dynamically adjusted to adjust with demand. The mining rewards decrease smoothly in Monero. So another thing is that we saw the halvening that happens in Bitcoin. And even though the halvening makes for a lot of excitement and a lot of news, it is, I mean, from the miner's point of view, think about it. It's like there's a calendar date in which your income's going to go down by 50%, right? It's disruptive, right? In Monero, we have a smooth block reward. So here's some charts. I don't know, because it's the PhD physicist, I feel obligated to show some data. But here's digital scarcity in Bitcoin and Monero. The obvious feature of these curves, which correspond to the curves of M1 money supply that I showed before, is that the M1 money supply is growing exponentially, right? This one has a limit. So that's the big deal with this being sound money. Monero deliberately chose a number of coins that is similar to Bitcoin. And so this brings up another thing I wanted to say, is that it's fashionable now to look at coins that are valued like a penny or something really cheap and think, wow, that's cheap, I'm going to get in because it's cheap. I think things like this, and also I would say technical analysis, immature techniques will work in immature markets, but immature markets will become mature, then the immature techniques will stop working. So, this has happened in the equity markets too. So there used to be there's like the same thing. It's like penny stocks in equities. Wow, people think they're cheap, so they can load up on them because it has nowhere to go up. They discount the risk that the penny stock could go to zero. If a stock starts at 100 and goes to zero, it's the same outcome as if it started at 10 cents and it goes to zero, right? But just because that gap is looks bigger, it biases your thinking. All right, so what kind of inflation rates do you get out of this? All right, so the Bitcoin and Monero inflation rates, and these are annualized inflation rates. You can see that, and the dotted blue line is where we are at this point in history. So what you can see is that we're about to begin, and the time scale, this is 30 years. So I like to think big picture. You usually don't see a 30-year chart in a CryptoTark. But the first 10 years, the left 1/3 of this plot has already happened, right? And then here's the next 20 years. You can see that we're entering a period in crypto in which the rate of monetary inflation, in other words, the rate at which new coins are rewarded to miners is dropping like a rock, right? So this is, the previous 10 years were deliberately high inflation years in cryptocurrency just to get the coins out there to people. Now it's like the reel, the fishing reel, the line, it's time to, reel them in. So there's that. Here's the gold inflation rate. So the gold inflation rate for the last 10 years has been about 1.7%. And what I mean by that is that people are digging gold out of the ground and increasing the supply of above ground gold by about 1.7% per year, right? So if sound money is growing at 1.7% per year, the growth of the USD M1 money supply, you can see since the financial crisis, that's the blue line. That's pretty crazy, right? Now, this blue line is not price inflation, which is what federal statistics would claim the Joe on the street sees. This is the monetary base inflation, right? All right, another interesting aspect is that in the next 10 years, from 2019 to 2029, we're going to be entering a period in which the inflation of Monero is actually less than Bitcoin. So if you happen to be a person who thinks that the inflation rate of the money supply is extremely important to you. Maybe something to note. There are a lot of current events. I'll just mention bulletproofs went in at the last planned hard fork. The space in bytes taken by every transaction is now over 90% smaller than it was before the fork, which means the size of our blockchain is now growing at a much smaller rate. And also, coincidentally, because fees in Monero are related to the size in bytes of transactions, the fees have also dropped like a rock. So the average fee to send a completely private transaction on the Monero blockchain in February, the median fee has been 0.2 of a US penny. So what's your excuse? Here's a taxonomy of assets. I'll try to move really quickly. I have 3 more slides. These are big pictures. So I have 1 row of non-fungible assets and 1 row of fungible assets, right? Here we have physical assets, so non-fungible physical, that would be real estate and art, cultural artifacts, right? Things that are tangible and physical, but you can tell them apart. Well, what about tangible things that you can't tell apart? That would be cash, precious metals, right? In the digital world, everything is centralized. So digital centralized non-fungible assets would be, say, prepaid cards, right? Because it's actually the Visa number on the front of the prepaid card that matters, which is a digital asset, right? But your checking account, stocks, bonds, derivatives, and also your account on a centralized crypto exchange, those are all centralized digital assets, right? That's the vast majority of the stuff in the world. Now we have this new world, this new option that's opened up in just the last 10 years for digital decentralized assets. And I would posit that there are 2 major ones that are worth thinking about. So Bitcoin is the leader in the non-fungible space. It's not fungible, right? It's a transparent blockchain. It's not fungible. And one thing that sets the Monero community apart in its thinking is that for people in Monero, it's not enough to say, oh, you should have opted into this mixing thing. Oh, you should have set your transaction with this or that option in our little system. Oh, you should have known that the actual headline feature of our coin is not being used by 99% of the people because they're actually using the transparent chain of our coin, which is actually just Bitcoin. I hope you all know who I'm talking about. All right. Since I have a Wall Street background, I wanted to show 2 price charts. And in Monero, there's also a strong ethos of not talking about price, because we don't care about the price. We just want to build the best money. We don't, like, Monero works whether the price is $1 or $100,000. So for the Moneristas out there, forgive me for the price charts I am about to show. Here we have unit prices. So this is the price of one thing. Again, I'm showing a 10-year history. Right? Here you see Bitcoin in black and Monero in orange. And just for yucks, I've also shown the price of 1 ounce of gold and the price of the S&P 500 stock index. So of course, in the mainstream financial news, at the end of last year, the beginning of this year, there's all this panic about a 20% drop in the S&P and how this was just a huge deal, right? So if you squint really hard, you can see that on this scale, right? So another thing to point out is that I'm using a logarithmic scale. And if I can give one piece of kind of financial advice for everyone who is involved in crypto, use the log scale. Use the log scale. Why? Because if Bitcoin drops from $20 to $4, that's the same pain as when it drops from 20,000 to 4,000. Right? It's the percentage move that matters. It's not the number of the actual price. It's the percentage of the drop that matters. That's why 20 to 4 is the same as 20,000 to 4,000. That's why you need to set your view settings in such a way that those appear to be the same. If you use the linear scale, what you'll see is this gigantic pump and drop for the 20,000 to 4,000, right? But the equally painful and analogous situation of $20 to $4, you don't see it. It looks like 0 on the linear scale. That's why you need to use a log scale, right? On a log scale, 20 to 4 looks like 20,000 to 4,000. That's what you're seeing here. And so for Bitcoin, you see this meteoric rise from basically under a penny to where we are now at $4,000. And Monero has seen a similar rise. I see the market basically of being comprised of 2 types of participant. And just to put it maybe crudely or disparagingly, there's the smart money and the dumb money, right? So the smart money has done the research, they've taken the time, taken the pain to understand all this stuff, right? To actually work out how this stuff works, all the different projects out there, how to keep custody of your own private key, stay on top of the news, do all that work, right? And they've come to the conclusion that this stuff is here to stay, which means that these are the people that are driving this kind of long-term trend that you see, for example, in the Bitcoin price. Now, on top of that long-term 10-year trend, you see these like peaks, right? That's the dumb money. These are the people who have not done the homework or can't be bothered or can't be bothered, basically. And so instead of doing fundamental research to come to their own conclusions, they spend their time looking around at what everyone else is doing, right? And then basing their decisions on what everyone else is doing. In Wall Street, this is called momentum, right? Momentum is when the fact that a price went up is the reason that it goes up more, right? So that's what the dumb money is doing. They're just looking around and seeing what everyone else is doing, right? And that's what gives you these bubbles and these pops. Now, of course, if you look at this on a linear scale, all you see is the last year or two, which makes it look like there's just been this giant tulip bubble, right? So I would encourage you to think about the bigger picture, which you can do by zooming out in time, and by using a log scale, zooming out in price. So finally, it's hard to know what is 1 Bitcoin actually worth, right? There's 21 million of them. What's 1 Bitcoin worth? It's hard to know, right? So, and this is the first time that anyone's seen this plot, by the way. I'm kind of rolling it out as a debut here at Cryptopulco. So as the final valuation chart that I'd like to show is that digital scarcity has a lot in common with gold, right? Gold is a naturally scarce thing that you can't fake more of. Legitimate crypto projects like Monero and Bitcoin are also a source of scarcity that you can't fake. So what I'm going to show next is the market value, the market cap of all Bitcoin in existence divided by the value of all the gold, above ground gold in existence, right? So this takes into account the price of gold, the price of Bitcoin, the price of Monero, how many Monero there were at any given time, how many Bitcoin there were at any given time, how much gold there was at any given time. This is data that the World Gold Council compiles, right? Oh, also, so when you do all this, here's what you get. All right. The bottom line is that at current market prices, all the Bitcoin in the world is worth roughly 1% of what all the gold in the world is worth. Likewise, all the Monero currently in existence is worth 1% of 1% of what all the gold in the world is worth, right? So something like this, it helps you get a ground. It gives some grip on asset prices in the crypto world because there's a physical comparable that you can make a ratio out of, right? So now you don't just have anybody's guess as to what this stuff should really be worth, right? The last point I'd like to make is that when you get a bar of gold, you can't flip it over and see who in the past has owned that bar of gold. You can't see the foundry that it got melted in. Well, I guess they do stamp that on it. But you don't see like the history of who used to own that gold. And so this analogy is actually more apt for the case of Monero than it is for Bitcoin, because Bitcoin is not fungible. So I'll leave you with that. The market value of all the world's gold is 10,000 times the market value of the world's Monero. I have my opinion on whether that makes sense, and I encourage you to come to your own as well on that. Thanks.
Anarchapulco, it's so hype, I'm trying to tell ya. This the event of the year and best vacation ever. Ron Potter, Jeffrey Tucker, just to name a few. Get your tickets, you don't wanna miss it. You should roll through, talking politics to health and self-improvement to investing. So many things, not one thing. Learn how to live life unchained, yeah. 4 days vibing on the beach, time to connect. All about growth, way more than a conference. This is Anarchapulco, yeah. Let's go.
You ain't seen nothing yet.